Hi, this is Randy Finney with the Right Side of the Chart, and today is Thursday, March 13th, 2014. As things have been light right now, at least I'm keeping my personal trading on the light side, waiting for a little bit more clear picture, technical picture to develop in the market, and waiting for a little bit of a better risk reward situation to really start re-engaging the market. In the last couple months, I've booked a lot of profits, and most of the posts have been closing trades. I haven't put a lot of new setups, haven't seen a lot of existing setups trigger. We don't have a lot on the site as it is, but that's something I plan to work on soon here as I finish updating the trade ideas. So let's go ahead and talk about this trade today. I'm choosing Micron. This is a trade idea short setup that I'm posting on the site today. And not that this trade stands out any more than any other trade ideas on the site. I just figured I'd take a little time in explaining the reasoning and thought process behind how I choose a stock or a trade idea, as well as how I determine my price targets, the methodology behind that as well. So we're looking at a daily chart here. As I go through these charts here in this video over the next few minutes, you'll notice in the upper left-hand corner, this shows the time frame that we're looking at. So this is a daily chart. The scaling's down here, so we're looking at a 2-year daily chart on Micron. And what I'm focusing on right now is this uptrend line that I have drawn here. What we have is a move up all the way from the late 2012 lows, very long-standing, very powerful, well-defined uptrend. Why am I looking to short a stock in such an unmistakable, powerful uptrend? Well, I'll talk on that here. But let's first talk a little bit more about this trend line. What we have as far as the reactions that define this trend line, we have 1, 2, 3 right there. There's 4, and then 5 solid tags, very clean touches. So we have 5 separate reaction points. And some of these you'll see several candlesticks. We have 2 or 3 days there where Micron fell and touched that trend line. So we have a well-defined, long-standing uptrend line, well over a year old, about a year and a half old in duration. And, all along, this has been a very healthy uptrend of Micron. If we look down here at the MACD, we'll note, if you look at the crosshairs, we have a high here, peak in the MACD. And then the MACD went on to make a higher high, and yet another higher high here. So we have a series of, it continues from back here, a series of higher highs in the MACD, which is healthy price action. That's what you want to see in an uptrend. So what's changed since then, and why is this all of a sudden why do I sense that we might be on the precipice of a trend reversal? Well, it's these divergences. As most of you know, I put a lot of stock into divergences, and they do play into my trades, both positive and negative divergences. And right now, since late December, if we follow the horizontal line here, we see all the way at the top, you can see prices peaked out there, as did the MACD and RSI. And since then, prices have gone on to make a considerably higher high, while both the MACD and the RSI have made lower highs here. And that's evidenced by these orange downtrend lines on the indicators down below, and this upper trend line, which also defines the top of this bearish rising wedge pattern. So we have a long-standing trend line, negative divergences in place on the daily time frame here. In a minute, I'll get to the weekly time frame. So that tells me that the momentum is waning, and there's a good chance that we'll see a trend reversal or at least a tradable correction in Micron here soon. Now, the trigger, a setup is only that. It's just a trade setup until we have a trigger. And the trigger for this trade setup will be a break below this uptrend line. Being that we are still in a clear uptrend in the broad markets, a more conservative or conventional trader may decide to wait for a solid close below this downtrend line, while more aggressive traders may go ahead and short on an intraday break. You could short a full half position, and maybe bringing that, if you only shorted a half position, bring it to a full position on a solid close below the uptrend line. We also have a support level here I marked as S1 that comes in around the 2220-ish area. That's marked, defined by this reaction low here. We have a gap right here. I'm also looking at the volume at price histogram. My first target is at T1. Now, why T1? Why did I pick this level? I draw support and resistance lines. A lot has to do with the reaction highs and lows in the stock. And if you look here, this is back in early October, we had a reaction high in Micron, then this reaction low here. However, there's a little bit more that goes into it than just that. And I'll talk on that in the weekly chart. This happens to be a key support shelf here on the weekly chart, which is as, if not more important than this daily support level. We also have, if you look to the left of the chart here, the green and red bars, this is the volume at price histogram. And you'll notice we have these large bars up here, some large bars down here. In between, we have this thin zone. So my expectation is you can see this horizontal support here defined by the line. That also lines up with this, the top of this, what I call thin zone. So if and when prices make a solid break below this S1 level, my expectation is that they'll move down quickly to the T1 level, first target level, and fill in this thin zone. From there, I would expect a reaction. We have, support here, horizontal support. We also have these large volume at price histogram bars, and these tend to act as support as well. Okay, below that I have these potential second and third targets. Now these are only potential targets at this time for a couple reasons. Number one, we are still in an undeniable uptrend in the broad markets, and as such, shorts are counter trend trades at this time, and so I would favor the shallow targets unless we see some type of evidence. We get some trend indicators, maybe the short-term trend indicators or possibly the intermediate-term trend indicators roll over between the time that this trade triggers an entry and before it hits that first target. I'll always extend targets on trades before a target is hit. I won't, after the fact, after we've hit T1 and booked full profits, I won't add that. So if the stock is still on the way down towards T1, and I see some evidence that the broad market, the trend has changed to the downside, then I may very well extend these targets. So that's a look at the daily chart, the pattern, the rising wedge pattern, the negative divergences in place. Just as if we had these positive divergences here at the lows, we'll see this a little more clearly on the weekly chart. And my reasoning for having the first target at this time, only about, around 18. It'll come in around 1880. I didn't. These are automatically filled. This 1876 just fills when I add this trend line here. I like to place my targets a little bit above the actual support level, so I'll update this chart. That'll probably come in around 1880, maybe a little bit north of that for the first target. Now let's flip over to the weekly chart and take a look at Micron. Now, again, divergences. I put a lot of stock into these divergences, and we can see clearly here. Let's just walk from left to right. This is a 10-year weekly chart, and going all the way back here into 05, 06, and all the way forward, what we see here are a series of up and down trend lines. This is an uptrend line here. We have an uptrend line here, downtrend line here. So what we have at each major inflection point in the stock, this was a multi-year uptrend in Micron that ended in mid to late 2006. And as you can see, if we look at the uppermost trend line, this is what marks the divergence. Follow that down to the PPO, which is very similar to the MACD. It just works better on longer term charts in stocks with large price moves. So I'm using the PPO in lieu of the MACD here. You can see it on the RSI as well. Unmistakable negative divergence leading up to that high. So these are what give a trader a heads up that although a stock is in an uptrend or a downtrend, that that trend is really losing momentum and a trend change is more than likely. And that is what we saw in the case of Micron here. There's the breakdown, an impulsive move down from the highs, breakdown, and of course that began the great bear market back that went all the way into, at least for Micron, it ended in late 2008, where the broad markets bottomed in March of 09. You can note down here, we did not have positive divergence at that low on the, actually I take that back. Let's see, if we drew this, we may have some divergence up to that point although that broke down there. But we definitely had positive divergence on the RSI at the lows, and that began a new uptrend. That uptrend was defined by this trend line, and once again at the highs, as that uptrend became exhausted, we had quite a move there. Goodness, from what is that, $1, $1.60 all the way up to $10. So quite a return. And at the top, as you can see here, the prices were making higher highs while the indicators were clearly making lower highs, negative divergence. And again, we have a nice, well-defined uptrend line, breakdown of that trend line. So a longer-term trend trader can really work off these weekly charts. If you can get a well-defined uptrend line, sit patiently, wait for a trend to run its course, get very extended, and then look for those divergences. And as you can see here, you go short, long, short on the trend line break. This was a little bit of a sloppy time period for a few years where Micron really consolidated in a large range. Then we had a downtrend line here. I've drawn divergences at the lows. We had this spike. This may have been a flash crash, a mini flash crash type incident in the stock. Either way, we had very few. This was a very brief dip below. If you look here, that's just a candlestick tail, and prices managed to close back above this support shelf, this horizontal line here. So in a sense, if you look at this being the lows, we have an equal low in the stock while the PPO and the RSI were making higher highs. So in a sense, you have some positive divergence there. And once this uptrend line was broken to the upside, that is your buy signal. And since then, Micron has just been on a phenomenal tear, very similar to this move here on the chart. And this is the uptrend line that I was just focusing on the daily chart. So again, weekly, longer-term trend traders may want to wait to see a solid weekly close below this uptrend line before initiating a short position. But as I like to see, we do have negative divergence on this recent high. I haven't added it's added on the daily chart. You've seen the top of the wedge there. And all we're waiting for is a breakdown of that trend line. Now, I mentioned a minute ago why my first target level right now is my sole target level. Micron made a breakout to new multi-year highs. If you look closer, let's zoom in a little bit here. We have this reaction high. What that was, go all the way back to 2006. That's when the stock had made its all-time high at that point, back in, looks like September of 06. And just recently at the end of 2013, Micron tried to challenge that high and was rejected. You can see this large red bearish engulfing candlestick. Prices got knocked down, came back to hit the trend line, but then turned around, powered up through it, and then made a solid and sustained breakout. So that is all in all, that's bullish price behavior. The stock broke out to new multi-year, or I should say all-time highs, which is bullish. Now, it did so while the stock is extremely extended. Not only that, we have the negative divergence in place. So my expectation or I should say when Micron breaks down from that trend line, and especially if it did it sometime soon, I think this would act as a great re-entry point or level to cover a short because that broken resistance now acts as support. And it's not coincidence that this level around 1880 is that first target on the daily chart, which again, I made a case for that, both on the volume at price histogram as well as that horizontal support that I saw there. So that is the logic or the reasoning behind my targets. And at least in this one, again, longer term, this chart does look bullish with Micron breaking out to new highs. But being the stock is so extended, the divergences are in place, I think it would actually be healthy price, longer term healthy price action to see Micron come back and revisit and back test those highs before continuing on, at least in the near term. So, okay, now to dig in a little bit deeper into my reasoning behind the Micron trade, why am I interested in shorting a stock in such a strong uptrend, especially in a strong sector like the semis? They've been for the last couple of years really strong. Remember, I'm neither a bull nor a bear. At times I'm bearish on a stock when the market is going up because I will, sort of like a sniper. I'll pick out the weakest looking stocks and I can short in a bull market. I can go long in a bear market. It's all about security selection. And when doing that, I take a top-down approach. I'll take a look first at the overall market, but then I'll look down at a sector. So when I look at Micron and going through my setups, I see Micron looks like a potential short candidate in that bearish rising wedge, the long extended uptrend line. So the next thing I'll do is take a look at the semiconductor sector. This is the XSD, which is the S&P Semiconductor ETF. And this is an actual chart on the website. You can use the post by symbols, pull up XSD, and you'll see this trade. As with all the charts, I timestamped those charts up here. This one was posted back on January 8th of 2013, so just over a year ago. And at the time, I was bullish on the semiconductors. I had drawn this large falling wedge pattern, and prices were challenging the top of that. Positive divergence is in place, and I'll go ahead and click to the next chart. Let's resize it here. Give me 1 second. Okay, and this is a few months later. This is in May 19th, so about a little over 5 months later. What happened is prices broke out of that bullish falling wedge pattern, came to backtest it, and moved up and hit that resistance level, which was my target. That was about a 14% gain. Now, from there, the wedge projected a little bit higher, but I figured that was decent resistance, and that's where I decided to take profits on this trade. And let's take a look at the chart now and see what's happened to XSD. Okay, this is today's chart, and we're looking again at a weekly chart on that semiconductor ETF. This was the resistance level, and as expected, prices did pull back, and we're looking again at a weekly chart. So this is several weeks, couple months actually, of a pullback in the semis once it hit that resistance level. But then they went on to break out, come and back test right here, and then move higher. This white line I've added is the projection. A very simple but somewhat effective method on projecting the measured move of a bullish falling wedge. You measure the distance of the widest part of the wedge, which is what I've done here with this white trend line. Measure the distance, and then you add that to the breakout point, and that gives you your projected measure move in the pattern. And coincidentally or not, look where prices are, exactly at the top of that measured move. So this, again, adds to the case. Yes, do I catch tops and bottoms? Often that's what I do. I know a lot of traders aren't comfortable with that. And when doing it, you need a lot of technical evidence. And this is, building a case just like a lawyer would, building a case, adding evidence. And right now, with this run, I showed the divergences on the weekly chart on Micron. Here's XSD. And looks like this one has had one heck of a move since it moved off the bottom of this key support level, broke out of the wedge. And I mean, this is just beautiful technical analysis. This was a wedge I had drawn over a year ago, and you can see without any of these trend lines modified or changed, you see the prices break out, back test, come up to hit that resistance level, pull back, finally break out of it, come again to back test it. I often talk about back tests as objective areas to add or enter a trade, and prices have since moved out. So again, we've pretty much run what may be the course on XSD, and let's take one more look at another chart. Okay, last chart, and then we'll wrap this video up. This is the SOX, which is the Philadelphia Semiconductor Sector Index chart, and widely used measure to gauge what the semis are doing. And back in 06, this is when the SOX peaked out. Had almost another attempt at the highs, fell a little bit short in 2007, and only recently has come up to challenge those highs. Yes, prices are trading above, but not by a whole lot and not a very impulsive move. On top of that, like everything else, it's a very extended move to get here. Now, from my experience, even if this level were to be cleared and the SOX index goes on to move up to the $650, $700 area over time, I would be very surprised to see it just kind of meander on through there and continue on up like nothing happened. More often than not, you'll see a chart like this. After such an extended move, you see a reaction first. Even if you get that breakout, my guess is this will prove to be a false breakout. It doesn't look very impulsive so far, so prices will probably come back in, and the SOX will more than likely either consolidate on or around this level or pull back a little bit. I wouldn't be surprised to see a pull back down all the way to the low 500s. and to build up the energy to make a sustained breakout of that level. So again, taking everything into context, looking at the semiconductor index here, we have the stocks challenging all-time highs, and as I said, prices just barely above it, but not comfortably above it yet to put that one in the books as a solid breakout on the stocks. So there you have it, and hopefully this video has been helpful. Thanks a lot, and good luck on your trading.